Hello, everybody. It's Basse Ben Buckner. Ben's in Chicago. I'm back traveling, if you will, in Istanbul airport this morning. Forgive me for the noise and all the commotion going on, but it's just part of what we do at Ag Resource in terms of traveling and meeting clients and getting on markets. And that's what we find important longer term because it gives you and the client a more global perspective of what's happening. Ben, I've been calling people that I know are related to the cash trade here this morning. Not hearing a lot new in terms of Chinese soybean demand. I think they bought a couple of cargoes. This would have been Thursday, announced this morning, 123,000. But other than that, I'm not hearing any more wheat. I'm not hearing any corn, and I doubt there'll be any corn going forward. But I think if China does buy anything this week, it's bits and pieces, and surely not the big 2 million tons of last week. I keep hearing that their total grab for this tender, or this tranche, maybe is the best way to say it, is somewhere around 3 million tons. We're up about 2.5. So they could still do some additionality, but I think it weighs on the soybean market, if you will, with Brazilian prices so cheap. We'll catch up on some export data and some commitment to traders, but what do you got this morning to talk about in terms of where you think we're heading? It is a holiday weekend in the United States, closed on Thursday, half a day trade on Friday, and that kind of wraps us up. So Ben, give us what you got.
Yeah, I think jumping in this morning early, there's not a lot to sink your teeth into. So I think one thing this week that will be pretty key short term, chart patterns. Of course, pull up your charts. We've got corn's 100-day moving average just below the market. Canned beans get back to their 20-day moving averages. I think that might have an outsized impact on kind of intraday flows. It's going to be a low volume, holiday shortened week. Otherwise, kind of digging into the bigger fundamentals, I think there's still two questions. Does China buy soybeans in bulk beyond what we think will be 3 million tons or so? Do they buy more than that? That's going to be the big question. And then is there some kind of weather adversity that shows up in South America? And really in the next 2 or 3 weeks, we've quantified the importance of December rainfall in Brazil for soybeans and in Argentina for corn. And so that is staring at us in the face. Forecast today look good, but I just wanted to kind of jump into the world cash market of soybeans, and that's kind of the bigger question too in terms of risk management, where soybeans are heading is any of this viable long term to the private sector? And so something we have highlighted over and over again, of course, is how cheap Brazilian soybeans are for January, and especially for February and March. There's a 90 cent per bushel discount in FOB premiums, not to mention China's ongoing tariff on U.S. soybeans and landed prices. But I just wanted to highlight what's happened really in the last couple of sessions. We've kind of all heard about the potential for China washing out of Argentine cargoes that they previously purchased. We dug into that. I think that's probably part and parcel of the Argentine market all of a sudden for spot becoming more aggressive. So they are offered kind of at parity or below the U.S. market soybeans for near-term delivery. But also we've seen that in ship lineups, Argentina is still shipping a lot of soybeans exclusively to China. So you've got both China looking for demand and Argentina looking for demand, but also Argentina still selling and shipping a lot of soybeans to China, over the next 6 weeks or so. But you can see here that Brazilian beans price to sell, we're moving kind of towards last year's harvest lows in the Brazilian flat price. So it just seems like if you're an importer, almost anywhere outside of Mexico, the Caribbean, you're just saving money importing beans from South America. So that is a concern of ours as we look towards the South American harvest, which again, probably you're going to see combines rolling in northern Brazil, just pockets, but in the next 30 or 40 days is imminent. And then looking at weather, again, what jumps out to me is not that the monsoon has kicked in bulk in Brazil, and we've got a pretty regular routine climate pattern in Brazil starting, in the next probably 48 hours. Weekly rainfalls thereafter, 1 to 4 inches. That's all very normal. It's Argentina, Paraguay, southern Brazil. We are still technically in La Nina, but it has had really no negative impact on rainfall patterns there. So what you're looking at is the 10-day forecast. I've highlighted major crop areas. Look at Argentina, you still have most likely something like 1 inch to 3 inches of rainfall in the critical producing areas of Cordoba, Buenos Aires, and Santa Fe. So I think we've once again pushed any potential concern in Argentina to now maybe the latter part of December. So you're not seeing any South American threats, at least imminently. And then long term, I just think, famous last words, but this is going to be a year without major threats. La Nina now seems to be dying. The climate models are all in pretty good agreement that we neutralize this thing, and we're probably heading towards something like El Nino spring summer 2026. We'll cross that bridge when we get to it. El Nino is generally favorable for the northern hemisphere, but I just think it's the general absence of La Nina this year does keep in place, room to grow soybean production in Argentina, crush, and especially corn production in Argentina. So the Argentine gray market's going to be oversupplied. So those are the two things I think we're worried about still, like we were last week. Chinese demand, South American weather. Doesn't seem like either of those are giving us a lot of fuel this morning. So look at those chart patterns.
I think it's a good rundown, Ben. I'm hearing more and more cancellations by China and Argentina. The Chinese just don't need the soybeans nearby. They just don't have anywhere to put them. And so my big concern is that, they'll take the U.S. beans, they'll roll out a reserve, and they'll cancel otherwise. This gives us a very slow Brazilian start season because China's not going to be buying as many Brazilian beans. But let's see how this all plays out. In my mind, beans and meal have the most downside. Though again, on the oil side of things, I think it's very hard to reach USDA's objective of 30% gain in biofuel demand, at least for the 25-26 crop. Everybody have a really good day. We'll see how the markets act and whether or not we're back on Tuesday or Wednesday. If something happens, we'll of course let you know. But again, it's in our minds still sagging, and we'll see if the corn market holds key support and if the bean markets can really Jan beans, hold above that 11.20 mark. Be well, everybody. Have a great day. We'll be back soon.